Welcome to our compliance conversations in the midst of COVID-19, hosted by ILSA and Spot On Insurance. Today we'll be covering producer agreements part 1, and it's part 1 of a 2-part webinar.
Thank you guys for joining us. I hope everyone's getting ready for the 4th of July weekend. Everyone's mics have been muted. I see Russ just finished taking care of the barbecue, grilling and whatnot there.
Texas smoke.
Good deal. If you guys have any questions while the session is going on, just make sure that you type them out in the Q&A section, and Joyce will get to them as quickly as possible. But this is going to be a lively discussion.
Our guest panelists are Joanne Delgado, Vice President, Education and Compliance at the Surplus License Association of California, and Wilma Orozco, Licensing and Appointments Manager, Ensurem. That's in Florida, right?
Yes, sir. Clearwater.
She's also the former principal officer of producer licensing at the Puerto Rico office of the Insurance Commissioner, where we met.
And we've actually switched places because now we're living in your beautiful island, and enjoying it, and now you're in the mainland. Our ILSA participants are also Russ Foster, General Manager at ILSA, and Christian Masonette, who should be with us shortly, Manager at Spot On Insurance. The conversation and chat manager today is Joyce King, our Quality Assurance Administrator. Joyce. And she is going to be managing both sides. She's going to be taking care of the conversation, making sure that it's flowing, and taking care of the questions that are coming in.
Yeah, so, multitasking.
Before we get started, one of the things for those of you that are new here participating, we want to show you where we put all of our bulletins that come to us from all of the DOIs and the stamping offices, all the regulatory bulletins. Russ, if you'll just show where we host those on our ILSA newsroom.
Will do. Are you guys seeing, actually I started off on the wrong tab here. Let me get back where we're supposed to be. If you see it, that is our corporate website, ilsainc.com. And on the newsroom tab, our marketing folks, who are just amazing, keep all of the state bulletins current on this page. In fact, sometimes more current than the states do. So you might find information here before you could actually go to the state website and find it. Everything is categorized. The most current ones on the page are at the top, but everything is tagged as well. So if you're looking for something specific, if you're looking for a specific state, since Wilma's here from Florida, we can click on Florida, and it'll take you to the legislative changes that are on there. So it's a great resource that's free. It's available to anybody that wants to stay current on what's going on in a particular state or in several states. Another thing that we have on the resources tab is the contact information for every state. So again, picking on Florida, if we, there we go. We click on Florida, you see that we have contact information for every department, the DOI, and also the licensee search portion that'll take you directly to that. Department of Revenue, Secretary of State, you can do a business entity search, or the stamping office if you're doing surplus or excess lines. So all those are great resources. They're all for free. We encourage everybody to bookmark that and go there so you don't have to look this stuff up yourself.
Yeah. I'll just share with you guys 2 other great resources that our team is constantly going to. If you're in the surplus line side, we love the WSIA.org. I always say WSIA. I know we're not supposed to say that, but that's the Wholesale Surplus Lines Insurance Association. I think I got it right, .org. And the other one, if you're filing things on the Secretary of State, the Department of Revenue, it is the AICPA.org. Both of those resources, excellent for filing requirements. So Joyce, today we're going to talk about producer agreements. Give us the backstory on it. Share with us like what we can expect to learn today.
First of all, I want to say today For all of those of you who like to come in just to hear me talk, I won't be presenting today, so you're not going to get to hear this Texas Southern drawl. If you like to hear that, I'm sorry. You know, is it a blessing or do you hate it? I don't know. That's up to you.
You don't have an accent, Joyce.
Not at all. I can't get rid of it. I've tried. Today we are here to learn, and I'm here to learn as well. I told them I brought my Big Chief tablet and number 2 pencil pen because I have a lot to learn on carrier agreements and producer agreements. That's not something necessarily that ILSA handles. So when it comes to some of the verbiage, some of the terms, the how-tos and the processes, that's where we need to learn that as well. It just helps us to be better at what we do here at ILSA. So we are going to lean very heavily today on both Joanne and Wilma to walk us through these things. Today, part 1, the focus is definitely more on the carriers, the agreements, appointments, carrier responsibilities. And then next week, part 2, the focus is going to be a lot more on the producer side, the agency producer agreements, and the responsibilities of the agents. We're hoping that Joanne will be able to join us next week for that as well. Joanne's got a big move ahead of her, and we just wish her all the best. She's going to be moving to California. Woo! All right, so just to get started, like I said, today we will be discussing the carrier side of things, the responsibilities of the carrier, and those pesky carrier agreements that the agencies have to fill out and complete with the carriers. So we're going to be asking, what are some things that carriers look for in an agent or an agency to partner with to sell their products? What are some things that the agents should be on the lookout for in a good carrier to partner up with? I have a special question to ask about courtesy appointments later. Sorry, I'm going to, sideline y'all with that one because we didn't even discuss that before. I think we want to talk about just-in-time appointments, ahead-of-time appointments. Wilma, I think we're going to weigh in on that for us. Before I get started with any specific questions, would either Wilma or Joanne like to come in and kind of preface the subject?
Well, what I can say is I haven't had the opportunity to work directly with a carrier, but from the agency side, it's very important that when you're looking for that match, you find a carrier that has the products that align with your strategy, right? That the commissions are interesting, and also that there's a platform that just facilitates the business, I want to say. And of course, there's a lot of negotiation that has to go on both ends in order to get an agency or a producer set up to start selling for a particular carrier. And so, of course, I'm sure that there's a lot going on the carrier side and what they have to evaluate to decide, yes, I want to engage in business with this or agency versus another one. When it comes to the agents, I can definitely provide more feedback on that. But from an agency perspective, I'm sure that there are a lot of negotiations that have to take place before you can actually get a contract executed to move forward and say, okay, let's bring this on and continue to do business.
All right.
And I think, what I can add is essentially that carrier-producer relationship is really the basis for the producer to really be able to go out and market business and figure out what that marketing strategy is going to be and what different resources are available to them, both on an admitted and a non-admitted basis. Similar to an agency agreement with its individual producers, a carrier's agreement with a producer or a producing agency is really a very detailed process where there have to be background checks, financial checks. There has to be a promise of minimum business. So in many cases, carriers don't want to work with producers that can't provide or produce less than a certain amount of business in a period, whether that be a given quarter or year. and essentially can be appointed and unappointed based on that production. So it becomes a really fluid process that's constantly, I'm going to say, evolving and changing. The other piece, and I know we'll get into a lot of the details, is depending on the state, it's the relationship between the carrier and the producer that really dictates how commissions and other payments to that producer are aligned. And this is where, from the surplus line side, this can sometimes get a little tricky from the standpoint of, in some states, the carrier also needs to appoint individual agents in order to make sure that the right relationship is in place from a regulatory perspective. So, so very similar to an agency appointing producers that work under its umbrella, carriers as well are very selective about the agents they want to do business with, and as well may choose only to do business with certain agents, which is really kind of where that whole wholesale market comes from. Because if they'll only do business with a producer at this level, what it requires is all of the smaller retailers to kind of funnel that business through. So that's kind of some of the background between the retail producer and wholesale producer relationship, is based on that producer carrier relationship.
Hey, Joanne, have you seen that tightening up? Because when I was like hands-on doing licensing back in, 1905, you could just, you knew certain carriers that would always process appointments for agents. And you didn't have to really show the book of business or anything like that. Have you seen that that has really gotten tightened up?
I'm going to say in my time it has, and it's been strongly dictated by regulatory changes. And I'm going to say not necessarily a change in regulation, but the states have tightened up with the carriers and really are holding carriers' feet to the fire to make sure that the producers that they're doing business with hold the right licenses and really meet the right requirements. So it's become interesting in that I can say in my former role, we had thousands and thousands and thousands of agents appointed. And one day as a company, I'm going to say, based on maybe some feedback that we had received from some states, is essentially cut those relationships in less than half. Not only from, I'm going to say, a business strategy, but also from a regulatory strategy, just because of the licensing requirements and the, really being able to manage the licensing and ensure that the licensing that the producer holds is adequate for the business that they're selling.
And the fees. There's appointment fees.
Mm-hmm.
And that's actually an excellent point that I definitely should not have overlooked. It is very expensive in some states to do those appointments.
Yeah.
Right, and we've seen with agents coming in new to our services that they're now with our client as their new employer. As we go in to assist maybe getting them appointed with a carrier that our client is aligned to, we can see in their record through NIPR, Circon or something that they've got all these appointments that date back years and are apparently getting renewed. Maybe, I don't know how often they have to do it. I don't think it's yearly every state, every carrier, but I can tell that there are individuals who are still appointed to companies that they're not doing business with and haven't for a long time. So does that speak badly of the carrier that they're not keeping up with it, or is that something that there's just so much of it's out of their control to gauge who's still working on their behalf and who's still not selling their products?
Yeah, I mean, I'm going to say it's a two-way street. So there are certain states where a producer has no control over the appointment, and it's up to the carrier to do the right thing. As well, so many states auto bill, and I'm going to say just merely lack of administration on the carrier end of making sure that everyone that's appointed should be appointed just generates an automatic charge. It's kind of all done on the back end, and they're not necessarily noticing or staying on track. So I think it's a couple of different factors that that are coming into play there.
Something I have seen though lately is carriers sending out notices to the agents about, hey, you haven't produced in this state for so long, so we're terming your appointment, avoid having to pay those renewal fees. Others, as Joanne was saying, will send out notices to us saying, hey, can you review if these agents are still with you, and so that they can do some tweaking here and there to avoid those fees. But it is heavy. It's a lot of maintenance, especially because, as you know, it's not uniform throughout the states. And I remember when I was with the Department of Insurance, that in Puerto Rico, you don't have any renewal fees. Appointments are perpetual, so you don't have to worry about that. And we would get a lot of calls from people who were licensed in different states saying, hey, but this state is asking us to pay renewal fees. So it just varies, and it's a lot to keep track of, to be honest.
Yeah.
Is there ever a situation where the carrier would charge back those fees to the agencies, or it's just strictly payable by the carrier only?
Most of them pass the fees on. The appointment fees to the agencies. Some pay for the state, for the resident state fee, but most will pass that on. It's part of the negotiation.
Okay.
When you're working with the carrier to figure out what the rules are.
That's one of the many things, I guess, that they're lined out in that carrier agency contract that we're talking about. Okay. I should read through one of those one day. I don't know if I could take it. All right. Well, I had my first question that I wrote down for you, and I know we've touched on this some, but when a producer is looking for a carrier to work with, what is the number one factor that they're looking for when evaluating carriers? And then in my research, I'll just throw out a couple of things and you can expound on that. In my research, it looked like ease of the underwriting process is paramount, and also maybe technology. Does that line up with everything that you know to be true?
For sure. Yes, definitely. Definitely. Especially nowadays when you, as an agency, you want to be out there with the latest tools and the latest technology, just making everything easier for the potential insured to get that policy, and also to help the agent out to market the policies. And there's a lot of competition, so you want to be the one with the latest gadget out there, and you need carriers that support that same business model and that same strategy. So if you are like call center, the agents are on the phone, they're on their computers trying to get that sale, and within the compliance parameters and everything that they have to do. And the last thing you want to do is send out a paper application to propose to insured and wait for it to come back. So you're looking for that partner. Now, if you're the type of insurance agent or the type of agency who's actually visiting clients and visiting and sitting with people at the kitchen table, then that type of platform will work for you to just pull out a paper and request the signatures. So it all depends on your strategy and your model and what you're really aiming to accomplish.
All right.
The other thing is, I guess, depending on your niche, if you have a niche, you're limited to what carriers you can go to, right?
That's true.
Yeah.
Yeah, and that's that will definitely play into the selection of who you want to do business with. But I also think that it really is today highly about the ease of doing business. And if it's difficult to get that business done and difficult to work through that process, then an agent has other choices and can kind of take their book elsewhere. It becomes the special books and the special lines that only certain carriers write that kind of balance that in the other direction.
Right.
Okay, now if you are a carrier at a conference at a booth, and there are all the people mingling through the conference, who's the one that walks up to your booth to talk to you, and you're like, oh, this is the one. It's not the new guy, is it? It's not the new man starting up a brand new agency, is it? It's somebody that's been around the block for a while that you want to get a contract together with. Why are you grinning at me, Arleen?
I'm not. I just opened up the chats, and so I'm seeing all the messages that we have there. Because I miss conferences? No.
Oh, I don't.
You know, we thought we would this year when we stopped traveling because of the COVID, but we are actually enjoying not being on an airplane, not traveling around, not the hotel rooms. It's a two-edged sword, really. You know, on one side, you want to go out there, meet people, hug people. On the other side, it's better that you don't.
Yeah. So, I mean, I'm going to say from my perspective, right, and I'm going to say based on the work that I've done, I think it depends on the insurer in terms of who they're looking for. So, yeah, I mean, the producer that's got the big book and thousands of policies, right? That's the stuff you want to bring in and write under your program or within your own, on your own paper. And so, yes, that's attractive. But depending on the market, so with the surplus line market and new products, what becomes very interesting are the innovative products that people are coming up with. And I'm going to say really the potential financial gain in terms of some of those new products that get developed, you know? So I think that it can be a little bit of both. We're seeing, so at the SLA, a lot more innovative coverages being written, a lot more at a parametric level, which is to me truly unique in terms of the types of parametric policies and how we've taken that concept and really moved it into so many different lines. So I think for an insurer, they're looking at profitability in as much as they're looking at the size of the book. Because ultimately, if you can write 2 policies that are profitable and make more money than 1,000 little policies that require all of this administration and management, you're going to go with might be the newer guy with this newer product. You know, it's a lot. It's really all about the data and the ability to kind of estimate, you know, loss and risk.
So here's one thing I wanted to ask you guys, and it really is my only last question for you. So I'm hoping that our attendees have some questions that they'll put through so I can ask our panelists. This is Florida specific, and I'm sorry to put this to you, Joanne. You know where I'm going because I've had to ask you this before. But at ILSA, we constantly have brokers in the surplus lines market, and they need to become licensed in Florida for surplus lines. And as you guys know, they must first be licensed for the admitted side for PNC. And once they get the PNC license, they can't proceed. We cannot get them a surplus lines license without them first having an appointment. Okay. Now these are people, and I have it all the time, that are just strictly in surplus lines. They don't even know any P&C carriers. They don't have any contacts on the admitted side. And so they're calling us going, ILSA, please help me. What do? I need an appointment. And I call it a courtesy appointment because that's what I think it's supposed to be called, but I don't know if that's the right term or not. And we've, had to get on the phone and call friends and call Arleen and say, who's your buddy? Who can you help get us set up with? And we've hooked up a few people doing that, but we can't do that forever. What's the solution? I've called Florida and asked them, and they don't have a solution for me. They said this is the regulation, this is the law. You must have this license and this appointment before you can proceed to surplus lines. Sorry, I don't have a suggestion for who you should call. Do you have anything at all that you can tell us about courtesy appointments in Florida?
I would say the solution is to change the law.
Okay, that's not going to happen. Next.
Joanne, what do you think about that?
Yeah, no, it has been a challenge. And so even when I was on the company side of the business, it was fortunate, right, that the company that I worked for had so many admitted carriers and we could give our agents that first appointment. But some of these regulations are very difficult to abide by. And I mean, although there's no specific regulation that says you can't have a courtesy appointment, it really becomes contradictory to the reason for an appointment, right? Because you want an appointment so you can write business for that carrier, not just so you can get a license.
Right.
So I wish I could tell you I had a great suggestion. I think that ultimately that first appointment is critical, and it becomes up to the agency that broker is working with to really have a solution in place. And I'm going to say that part 2 discussion of that agency-agent relationship is really important to understand, because the agency in some cases really winds up potentially being the solution, in that they would already have appointments with many admitted carriers, and in those agreements, again, automatically be entitled to appoint those individual agents that come and work for them. The tricky part that Wilma pointed out earlier is, how do you manage it all, right? So managing all of these different licenses and managing individuals which move around and leave and get new jobs and start doing new things, give up licenses. It really is, I'm going to say, one of the things that I've always looked to and hoped that the NRRA and really a uniform licensing model would have resolved, right? So I'm going to say that's sort of on the regulatory side, but really in looking at like NARAB and coming up with a more unified or more uniform process is truly the right answer to all of this. In the interim, I think it's really up to the agency getting the appointment from the carrier to really have those pieces in place beforehand. Because otherwise an individual agent just going out and getting their license for the first time is really stopped, or, I'm going to say unable to get that surplus line license until they're employed by someone who has a relationship. And that's really truly how that should get leveraged, is through that agency carrier relationship.
So you're unable to change the law in Florida really because you don't have enough backup. In other words, if a lot of the companies started to squeal about this, then something might be done in Florida, but because there's not enough of that pressure, it's not going to happen.
Yeah, and it's interesting that it happens to be in Florida, just because Florida is a state whereby each agent is standing on their own. Right? So it's an individual license state. Everybody's got to have a license in order to transact or solicit. So there's no agency license for people to be organized under. although they do have an informal organization process, it's not truly the regulatory process. So every agent needs those appointments.
Mm-hmm. Yeah, I mean, in our case, I mean, because we have such a large network, we are always able to find a solution. But if you're just a standalone agency, surplus lines, you know, you have a problem.
Absolutely.
It seems like so many of the laws in Florida are consumer protection oriented. So when you run up against something like this, it's like, what purpose does it really serve to try to put the cart before the horse, I guess?
Yeah.
Ross, and that's very important what you just mentioned. And as a former regulator, there were a lot of times where situations like this and these conversations were held where you would pick up the phone and you would listen to something and you think about it and you say, it does not make any sense. Where really, we have the letter of the law here and we're doing our best to enforce it, but it's really not working. Let's admit this, it's not working. And you talk to your deputy commissioners and you meet with your commissioner and you say, hey, this is going on. And if at the same time they're listening from the industry, the industry leaders are knocking on their door and carriers are knocking on their doors and say, hey, commissioner, this is really not working out like we wanted it to. Things start changing, they do. As an individual, as a citizen, you're like, oh yeah, change the law, that's never. But really when you start working at and you start voicing, this is not working, it's not really achieving the purpose that it was designed to, change does happen. But it has to be voiced. The commissioner has to be aware of what's going on.
Joyce, can you give Florida a call real quick?
I talked to them. They didn't want to hear from me.
Like, no, go
I
away,
let
go
them
away.
know under no uncertain terms what a pain in the rear this was for us to try to get these appointments for people that would never, ever sell admitted business.
Wow.
Well, the good thing is we have Joanne, who used to be on the carrier agency side, and now she's a regulator. So she's got to have our back on all these things. We're giving her all of our complaints.
No, well, and the process for changing these laws is pretty complicated. It's actually interesting as I've made this transition, what it takes to get a law changed. And I would start from when I was on the broker side of the business and how we would work with our carriers to figure out, hey, what do we really all want to get together and fight for, right? And that's where, you know, you have some really great organizations like WSIA and AIPCIA that are really there to support the network and try to get those changes in place. But it's really it has to be a large group effort. And I'm going to say in times like today, you know, with I'm going to say our pandemic and sheltering in place, so much of what was lobbied for and was on the table is simply now just postponed a year because we don't have a normal work schedule, a normal work routine. And, you know, I'm going to say the states can't keep up, and they're changing those legislative sessions and to really focus on really creating legislation that's going to keep everybody safe.
Yeah.
So a lot of work gets done and it waits.
The other one that we would hit up from time to time with things like this is David Kadoma. I don't know if he's on this session, but he's now one of your colleagues at the California Surplus Lines Association. So you have another one that used to be an advocate for the people is now in California. So, you know, that was another one that we would like kind of like ping to say, hey, can you try to make some change here? California's getting all the goodies.
Yeah.
Now, someone in the chat, and I've lost it, mentioned FAIA. Let me see. I would suggest FAIA. They have a great resource and might be able to make suggestions on carriers that will help. That is awesome. But forgive my ignorance, but what is FAIA?
It's the Florida, I believe, like the Florida Association of Independent Agents.
Independent agents. Okay. Okay.
And that's Christy Dowell. That's our friend. Hey, Christy.
Yeah. Okay. Florida Independent. I thought that might be it. Just wanted to make sure. Okay, good. Thank you, Christy. And let's see. I had a couple of other folks weighing in. Let's see. Thomas Ross apparently sent a question. I'm sorry I did not get that, Thomas. Can carriers change the contracts to allow for adjustments in P&C volume due to the pandemic? This would be for contingency bonus arrangements. And I can reread that if y'all need me to repeat that.
Well, I can tell you carriers they can, right? So they can have an addendum, they can have what I'll call a temporary, I'm going to relate it to a regulation, but an emergency order that says, here's how we're going to handle this. There's no regulatory requirement for them to do those things. I think it becomes more of a business, arrangement, and really what is smart for the business and trying to keep the industry moving and continuing to grow. So carriers can, since I'm no longer on that side, I don't really have any insight as to whether they are in the pandemic. I don't know if there's anybody on the call that might be able to share that.
But so Thomas, yeah, you can have that discussion with your carriers.
You know, what we're finding in California on the surplus line side is that the market has not slowed down, at least not yet, right? So we're anticipating it at some point, but it is as busy as it has been, and the growth has been as steady as it has been in past years. So the market in California has really remained very stable and has continued to grow.
We're actually seeing that all across the board with our clients. We're busy because they're busy.
But you know, that's kind of scary because it's happened to us before in 2008, 2009. We thought we were immune. And then we just got hit at the tail end. And then it was like slam.
Yeah.
All these people going out of businesses, and it really put a dent.
And that's how we're planning, right? And, you know, as an association, it's not planning from a business perspective, but we anticipate there will be a decline at some point where the predictability has been more difficult than we expected. We normally can do a little bit more predictive modeling and kind of have that time. But so far, that modeling is not showing that slowdown quite yet. So, but I agree, it's a matter of time, I think, for everyone.
Jody, where are you at? I see Jody said that this was true. They had a record number of submissions in June.
With Joanne.
Okay, Jody does. Awesome.
Yeah.
Awesome. And Larry's referring to the contract changes. If it's a matter of contract. If the contract does not allow for it, the carrier cannot unilaterally change the contract. It depends on the terms.
Yeah.
Thank you, Larry, for that information.
Thomas Ross says, I'm referring to restaurants and bars as well as return premiums due to workers' compensation audits.
That's a very good point. So you have less people coming to those, to the places. So definitely less business, workers' comp. You don't have people employed. You don't have people physically there. Joanne, you want to weigh in on that?
Well, I mean, what we've seen from some of our brokers, and I can only really speak at a very high level, is we've seen some redesign of the programs as it reflects, restaurants and bars, or restaurants, bars, and taverns. So the programs have been rewritten and moved to the surplus line market to kind of cover this unique change in the marketplace, right? So we didn't anticipate it. So I think the difficult piece with restaurants, bars, and taverns is the types of coverage that they need. And in terms of really trying to satisfy that with changes on the, while the policy's placed in the admitted market, again, we've seen some interesting program designs moving it non-admitted to more customize it to I'm going to say this current situation.
Hey, I'm trying to get some attendees to come over here to the dark side with us and be on the panel.
And Jody from your team, Joanne, is saying that it should also impact general liability as well, since sales is a basis of premium.
Absolutely.
I have a question that was presented in the Q&A. Do you find that agency networks and alliances are helpful in getting initial appointments, especially for agents and agencies without a production track record?
I would say definitely yes.
I would say so too.
Yeah, I agree.
Yeah, it lets you get that foot into a lot of markets that you typically wouldn't be able to get into without the volume.
Jody said yes, so she's in.
Got Jody in.
There you go. Oh, he has to show himself.
Yes. Show yourself. Stop hiding. Larry, can I get you in here? I'd love to get you in.
For Larry to come in.
Yeah. I'm going to promote him anyways.
Larry, is it okay? I mean, we don't know. He might be in his bathrobe or something.
So now I have a question real quick, and this is just for my own education, but
hey, welcome.
You can see I'm dressed for the occasion.
So are we.
Great to see you, Larry.
You too.
Are networks and agency alliances, is that the same thing as clusters? Or is that different?
I'm not sure that I can answer that.
Okay.
I don't know what you're talking about, Joyce. Clusters.
Hey, I was just doing my research today, and it talked about clusters. And from what I can tell, it seems to be very much in line with a network or an agency alliance or something like that.
I can
confirm. It sounds like it.
What I can say is when I was back at the Department of Insurance, indeed associations would help to get agents appointed that they were just members of the association. That was the only tie to them, and they would definitely help out with that. Also with the E&O coverage and all those other requirements that are very specific. And if you're just an independent agent, it might be hard for you if you're starting out for you to obtain, or you don't know where to go to. Associations were key in helping agents with those requirements, for sure.
So that's definitely another resource. I mean, I know that a lot of alliances have been cropping up quite a bit. Alliances and networks. Yeah. Some very powerful ones, very big.
Now, Larry, in the Q&A, you had sent one question and it said, is it a seasoning requirement? And I can't remember what we were talking about at the moment. Do you remember?
Yeah, the requirement that you have to have the admitted P&C license before you could have a surplus alliance license. I was just trying to understand the reason for it, and it smells like a seasoning type requirement.
On the producer side,
yeah,
you're saying it, yeah, okay. I believe that's probably it. I mean, I don't know. Joanne, do you know?
I mean, it is and I'm sure Wilma as well can kind of provide her feedback. You know, so much of this really kind of from a knowledge base is building blocks. So in most cases, you know, it is considered seasoning. There's a couple of states where you don't need it, right? That they address them separately. But the majority of states require the sequential or require the sequence.
Yeah, I
Right.
mean, you could see that. I mean, it sort of makes logical sense that you'd start as an agent or a producer for standard business, and then you get more excited as you get more experience and move on to more esoteric stuff. I mean, you're not going to have a junior producer producing oil and gas rig products. You know, you're going to have somebody who knows what they're doing, and so I understand it. It makes some sense, but I would think that educational requirements could replace something like that and allow somebody to, you know, start with a look. If you're, I mean, to put it simply, if you're a producer that a surplus lines producer and it's your family company, and you know the daughter or the son comes into the business in Florida and they have to have an individual license, the only thing they do is this stuff. They're being trained, they lived with it in their home, they understand the stuff. I mean, there should be a way to just, you know, jump over that gate and do it. And I mean, I'm not sure how exactly you would do that besides changing the law, of course, but uh, the way, at least to me, the way to sell it would add some sort of an educational requirement that would be the alternative to having the standard license in the first place, to allow people to come into these small agencies, that family businesses, that this is all they do. And, you know, what am I supposed to do? Send my kid off to somebody else for a year and then come back? I mean, that's an alternative, but seems to be a way to deal with it.
Larry, I think it sounds like some great pro bono work for Pat Boggs for you and your team. Get that law changed.
That's a whole lot of kettle of fish.
By the way, Chrissy Dow answered that clusters are generally a group of insurance agents that want to team up together to get better appointments and better commissions.
So just like the alliances.
Yeah.
So
But it's not a legal entity though. It's just a loose affiliation.
Mm-hmm.
Yeah, you got to watch that because you got antitrust issues with that too. I mean, people have to be really careful with loose affiliations that are all trying to do things together in business.
yeah, because at least the alliances and the networks, those are legal entities that you join. So not quite sure about the status of the clusters. One thing is I wanted to give all of the attendees a taste of what we're going to be covering next week, because it's going to be part 2 of the producer agreements. And producer agreements, the topic actually came about because Wilma brought it up. She actually talked about how an agent sometimes, when she was at the Department of Puerto Rico, sometimes an agent would go to another agency, and correct me if I'm wrong, and all of a sudden they would find out that they no longer could get commissions because of wording in that producer agreement. So this is going to be a huge thing to talk about, like knowing what you're signing.
Yes, and most, you know, you are excited to join a company or to join an agency and start selling as soon as possible, and you don't read. So you're just unaware of what you're really getting into. When, you know, when you're in the honeymoon, everything is beautiful and sweet, and then maybe further down the road you realize, hey, this is not really where I want to be, or there's another opportunity somewhere, you know, knocking, and I just want to take my experience and go somewhere else. And you find out that when you join this new group, you can't sell for the same carriers that you were selling before, because there is a hold on your appointment or on your contract. You need a release, you can't get it until 6 months, and it just becomes a nightmare. Yeah, that's really interesting. And when I was at the Department of Insurance, as you were saying, Arleen, we used to get calls about it all the time, and agents says, hey, you need to help me out because I can't get out of this. And we would tell them, hey, that's a private matter between you and the agency, or you and the carrier. We don't have jurisdiction over that. And it was frustrating for them to hear that, but it's the truth. So the Department of Insurance can't really get into that unless there is a violation in the law and the practice. So yeah, that's really interesting.
You know, it's just like any contract, and this is very pertinent to what's happening now with COVID-19 and all of this stuff, read the contract. Got to read your contract. You know, you can't assume what's in the contract. You can't think, oh, it's a standard contract. Oh, it doesn't have these kinds of provisions. You know, not every restrictive provision is legal. People have to have, you know, they have to have somebody look at contracts for them. If you're a producer and this is your livelihood, and you don't read your production contract when you join an agency or whatever, and then you want to walk away and you think you're going to take that business with you, you might not be able to do that. You have to read your contract. It's pretty simple.
Good.
Larry, you'll be getting an invite for next week's call as well. Love to have you weigh in next week when we talk about that.
Fine.
All right.
Way to draft him, Joyce.
He seemed pretty easy.
Hey, he's great. If you want to hear Larry, he's been at least on several episodes of Spot On Insurance with us.
Oh, yeah.
Phenomenal stuff.
Yeah.
Thank you.
Hey, someone weighed in on the Q&A a little bit more about my clusters question. It says, she has said, an alliance combines with other agents so you can increase production with carriers and generate more contingency. It is not always successful. If one agent has poor loss ratio in production, it could backfire. That is considered a cluster. Yes, I saw many nationwide captive agents enter into clusters with other nationwide agents.
I see. Interesting.
It's from Lori Hand. Thank you, Lori, for submitting that. We appreciate the additional info.
Yeah, no, and it's great pointing out that it's not always a good. It's got benefits, but it's got a downside if that business that book does not run well. So that was great to point that out.
Great, thank you, Lori.
Yeah.
Go ahead, Larry.
Yeah, you have a good comment here from Lisa. You might want to read that.
I was going to that one next. Let's see. Lisa says, originally during the drafting of Dodd-Frank and the NRRA, they tried very hard to get rid of the PNC requirement for the surplus lines licensing in non-resident states, but the states fought back on that. The excuse was that multi-state policies would require the producer to hold PNC and surplus lines in all states involved in the risk, but the states have pretty much held strong on that requirement.
Good history.
Yeah, no, I didn't.
Yeah, Lisa's full of that stuff.
Yeah, I wasn't aware that they had tried to strike it. I mean, you know, the other piece is right. Your PNC license, it's a revenue generator. So if all, and this is, I think, where uniform licensing really has not worked its way out because everyone can't get their piece of the action.
Exactly.
So can't fix the problem if we can't figure out how everybody gets paid.
One thing that has changed, one thing that I have seen change is I remember when I started at the Department of Insurance, and this was back in 2004, you needed to have that PNC license for some years before you were able to get the surplus lines, and that has changed, I want to say, a bit, where it's just a matter of maybe paying the license fee and providing the bond. But it's only in some states, and it's mostly also pushed by the Producer Licensing Model Act efforts and trying to get everybody on the same page. But yeah, some states do fight back and don't want to change it.
I think that has changed now for every state. I can't think of any one state that still has a time requirement for you to wait out before you can get the surplus lines. When I began my journey with surplus lines licensing, the one that stands out to me was Arkansas. I think they had a 3-year wait from property and casualty license to the application for surplus lines.
Yeah, unless you got sponsored, I think.
It's maybe something like that.
Well, I mean, it might not have been Arkansas. There's a lot of A states. Remember one state, if you were sponsored,
blame it on Alex.
They would let you supersede that. You know, you didn't have to wait it.
I'm going to date myself. When I started licensing in '93, as a non-resident, you could only get licensed in 14 states, and that was it.
Oh, wow.
Yeah, it seems so ancient, like such an ancient thought.
I mean, not to brag, but I was 1 year out of high school in '93.
So we look forward to next week's discussions. I also wanted to just share with you guys, like we said, Larry has been on a previous episode, Joanne has as well on our podcast. And we want to show you where those podcasts reside. We've done a huge series on compliance do's and don'ts. And there's quite a bit, like probably over 30 episodes just on compliance issues. Larry has come to us, I think, for both compliance do's and don'ts and reinsurance contracts, because he is the king of reinsurance. And you can check out Larry's story. He has an amazing story. I want
to learn a lot about reinsurance, yes. Reinsurance 101.
Yeah.
Man, that was a class.
Yeah. So, you know, feel free to check out our podcast on spotoninsurance.com. There's, you know, it's listened to from probably over 100 countries, and we have insurtechs, traditional brokers, just about everything to do with insurance, all the different sectors of insurance. So check it out. And Joyce, did you have any additional questions?
From me, no. We do have one from Elaine Nance, and I love this question. In insurance, we love our mergers and acquisitions. How does M&A among carriers impact carrier contracts and appointments? Who wants that one?
Wow. That's a big one.
Yeah, nobody's going, pick me.
Well, I mean, I think that, you know, ultimately having gone through some of that, you know, the way we always handled it was really at a global level. So it was really more an addendum to existing contracts and a modification to existing contract as opposed to new contracts. But I would suspect that, I mean, there's more than one option as far as how a company might handle that. But M&As are typically, and I'm going to say if you dig down underneath the covers, they're typically, there's not a lot of companies that handle them, I'm going to say 100% well from start to finish. You're going to find holes in that process.
This is the kind of thing that could easily slip through and someone won't pay attention to. In the due diligence exercises that I have done for a wide variety of M&A transactions, I haven't personally looked at this, but I could tell you there's M&A lawyers, unless they're real insurance specialists, really wouldn't even think about this and wouldn't have a clue about this, which is why you need to have specialists involved in the due diligence for these transactions. And I agree that just thinking out loud, the way to address this, of course, as the companies combine, would be to amend the existing appointments and contracts, as opposed to setting up something new. You know, they'll terminate when they terminate, but the amendment or the addendum makes the most sense, because you probably will have more regulatory issues if you have to start new contracts. It's just too much to do when you're trying to combine companies with all the little facets that they have. But you know, this is something that's been done clearly, because many companies that have every company has appointments, and clearly they've had to handle this as companies are combined, and we see what's out there is combinations happening. You know, I mean, last year there were quite a few. There's going to be several this year, especially as we roll into later in this year and into 2021. Given what's happened with COVID-19, you're going to see quite a few more combinations, I would think, as new capital comes into the industry, and companies that are getting hammered are going to have to do something about their business. So you'll see a lot more of this, but you know, clearly the concept of amending the contracts makes the most sense to me.
What I when I was in my former role, and we used to go through these a lot, and it would all come down to who was the one remaining. And if the
Yes.
remaining or the one who survives, so to speak, in the merger and acquisition was acquiring everything and all the obligations that were existing, that those appointments would remain on the books, so to speak, and would just be a matter of changing the name of the carrier on the
Right.
appointment,
Right.
and just updating that information. But if both entities that were in the transaction disappeared and a new one was the one that was acquiring everything, then it was a different
Yeah.
ball game.
That makes sense. That's right.
So next week, we're gonna do deep dives into all of a whole lot more on producer agreements, and we look forward to you guys joining us again. Thank you everyone for being here. If you guys have additional questions that you think of during the week, make sure that you send them to us at ccquestions@ilsainc.com. Also, you can always call our office and speak to one of our compliance specialists.
Say, hey, Joyce.
And that number is 254-729-8002. Thank you guys, and have a safe and happy 4th of July weekend.
Enjoy.
So good to see you.
Wow.
Thanks for having me
Bye-bye.
join.
Thank
Take care.
Thank you, Lori.
Jody, thank you.